Okay, now this. Worries over inflation and high interest rates have sent the stock market crashing back into the claws of a bear market. So what does this mean for your money? Local financial professional Ryan Wheelis is back with us. He's from Allied Wealth, talking about what we should be doing with our money right now. Good morning, sir. How you doing?
Hi, I'm excellent. It's great to be here. Thanks for having me on.
Yeah, so let's, well, first off, for people that don't know, can you define what the bear market is?
Well, a bear market simply is a market that is down 20% from its recent high points. And what's really interesting about this year is both the stock market and the bond market have entered bear market territory. Now, bear markets usually occur during times of slow economic growth. But right now what's happening is the economy is actually doing really well, and the Federal Reserve is trying to cool the economy down. So it's kind of a manufactured bear market, if you will, and people don't know what's what. I mean, traders on Wall Street are baffled. And so until the Fed starts or slows down the rate raising that they're doing, I don't think we're out of the woods for a period of time. We keep bouncing off the 35, 50-ish level on the S&P 500 index. If we go through that, I think we have 15 to 20% more downside to go. If we stay at this level and begin to go the other way, I think we'll be out of the woods and start heading up the other way.
So, Ryan, folks looking at their portfolios and whatnot with that number, I mean, in the short term, at least, they're looking at maybe 20% down in some cases. So that's got to be a scary thing.
That's exactly right. A lot of people are down as much as 25, I've even seen 30%. The biggest thing is understand that bear markets last around 300 days. And usually the recovery from a bear market in the first year on average produces about a 50% return. The 3-year returns around 90%, and the 5-year returns around 130%. So the main thing to understand, folks, is that it's about time in the market. You have to be careful here. What you don't want to do is say, oh my gosh, the world's coming to an end. Panic sell your portfolio at a low point and then lock in a loss and miss the upside of the market. And I know that's difficult for people to do because they begin to get emotional with their money. But the most important thing is do not panic. Understand that you are a long-term investor. If you have recently retired, guess what? You're not to the finish line yet. You've got to live the next 30 to 40 years without a paycheck from the job you just retired from and not run out of money or income in the process. If you're saving for retirement, you're in a great spot because the dollars you're putting in your 401k right now or IRAs right now, your dollar cost averaging at a low point, so those dollars grow and become much bigger when the market recovers later. So most important, do not panic.
Well, yeah, I mean, anytime you see these bear markets, obviously, if you've got some money to put in, there are deals out there in that sense. But Ryan, I do think of folks that are right on that cusp of retiring, and it's like, man, if that was something somebody was planning to do over the holidays, they may want to wait this out another year.
And unfortunately, that's exactly right. And if you're somebody who's retirement minded in that red zone where we call 5 years retirement, you should absolutely be doing a couple of things. Most importantly, look at your non-discretionary expenses: food, water, shelter, clothing, access to health care, transportation. Make sure that those expenses are covered from a guaranteed source that's not reliant on the stock market. That's called a paycheck, by the way. And then take your dollars for vacation and travel and maybe your dream car or dream mobile home, whatever, or motor home, whatever it is. Take those dollars and put those in the market and use that as your paycheck. So it's very important to have a comprehensive financial plan that we do for our clients at Allied Wealth all the time so that you can stick to your plan in down markets and not panic sell.
It's a weird time, I think, psychologically. You know, Ryan, on one hand, if you got some good, strong economic numbers, but you've got the Fed pushing interest rates up and everything's so expensive that it feels like it's not good, easy economic times, you know?
Well, that's what's crazy. It's a total conundrum right now because we do have good numbers. The unemployment numbers were great a week ago, and that's why the market actually went down. But, you know, there's a lot of things that are really good, but there's a lot of things that are starting to get bad. For instance, housing prices are starting to come down. Mortgage applications are starting to fall. So we are starting to see the real estate market cool. The volatility in the stock market is certainly creating a very uneasy feeling for a lot of us at home. And it's just one of these things we're in a complete and total conundrum. And we will not be out of this until we start seeing the supply chain come back online, which is happening, by the way, and the consumer price index start to fall. When those two things happen, we will know we're getting out of the woods and we should be okay.
I always appreciate you joining us, Ryan, and keeping our eyes open to it. This is local professional, financial professional, I should say, Ryan Wheelis, Allied Wealth. Good to have you back, sir. Appreciate it.
Always a pleasure. Please have me on again in the future. Happy to add value where I can. Cheers.
Indeed. All right, sir. Thank you.